This is the only guide that you'll ever need to buy your first home. With the right plan, you can get pre-approved, find the perfect home, and move in a lot faster than you think. I've helped hundreds of first-time homebuyers follow a proven process that lets them get into a home with the lowest possible down payment and the best loan options available. In this video, I'll walk you through everything step by step, from getting pre-approved for the perfect home loan to finding homes within your budget, all the way to structuring your offer the right way so you can actually win. And after 10 years of helping thousands of first-time homebuyers, I know it works. And it's this exact system that helps buyers go from renting to owning a lot faster, with less money out of pocket and with a ton of confidence. Let's get started. This is the exact game plan that you're going to be able to use if you follow this to a T that I can pretty much guarantee will help you buy a home this year. And so in this video, we're going to cover 4 basic steps to get you all the way from where you're at today to closing on your first property. And to make things super simple, there's really only 4 major steps in the process that you're going to follow along with in this video to show you how you can go from where you are today to closing on your first property. And this whole process starts with budgeting and getting pre-approved for a home loan. Now, most people think that the home buying process starts with shopping for a home, but for me as a loan officer, I think it's incredibly important to understand where your finances are so you can make a well-informed and confident financial decision. After all, buying a home is probably the biggest investment that you're going to make in your life. So I want to use this video today to kind of show you how you can make that as easy as possible so you can buy with confidence. So let's go ahead and start with creating a budget and what that ultimately looks like. So when I bought my first property, the first place that I started was creating a budget because I wanted to understand how much of a mortgage I could reasonably afford. So tracking my monthly income and expenses was a great place to start. Typically, a mortgage should be no more than about 40 to 45% of your income. Whether that's your pre-tax or post-tax income, depends on where you live. In California, we pay a lot more in income taxes. So I went with my post-tax income to figure out where my mortgage payment would be, but do whatever's comfortable for you. Another big goal for me was to pay down as much debt as possible, so I had as little monthly payments and I could actually qualify for a bigger property. Most people don't realize this, but every $60 a month in debt that you can pay down is another $10,000 roughly in buying power for your next home. So, for example, if you were to pay off a $600 a month, car payment, that's about $100,000 in buying power for you. That could be the difference between buying a condo or getting a larger single family home. And for me, that was really, really important. Now, once you figured out your monthly expenses and where those are, you want to figure out how much money that you have saved and what your savings goal should be. Obviously, this starts with figuring out how much money that you have right now, especially if you're maybe considering getting a gift from family, but you want to know ultimately how much you're aiming to save up for. As a general rule of thumb, most first-time homebuyers put down as little as 5% down, and then you're gonna have to remember about 2% of the price for closing costs. So whatever you're buying, let's say a $500,000 house, I think 7% should be the goal. So about $35,000 is what you need cash out of pocket to secure that property. Now, of course, I would never ever recommend that you spend every single dollar that you have to buy a home. I always recommend having at least 3 to 6 months of a cushion for your monthly payments and expenses. And that's why we did that budget earlier, to have in case of a rainy day, right? In case somebody lost a job or you had a big expense come up out of nowhere, you want to make sure that you have, an emergency savings fund set aside, especially in your first couple of years of homeownership. And by creating this budget, you'll be able to do something called a homeowner trial run, which I'll talk about later in the video. But just keep in mind what your monthly expenses are now and what your savings goal is when we talk about that later. Now, depending on where your credit score is right now, you might be thinking that on top of getting money saved up for a down payment and making sure that you've paid down some debt, maybe you want to fix your credit and get a better credit score so you can get a better interest rate on your loan. Well, in general, these are really my key tenets for when it comes to fixing your credit. Number one biggest rule that I could say is follow the 30% rule for utilization. Basically, if you have credit cards out there, you typically don't want to have a balance of more than 30% of whatever your credit limit is. Most people don't realize this, but once you are over that 30% threshold, your credit score takes a bigger hit, almost like your card's actually completely maxed out. So if you're really trying to improve your credit score as much as possible, keep those balances as low as possible, but aim for about 30% utilization. You don't have to pay off your cards entirely. A huge mistake that I see a lot of home buyers make when they're preparing for their credit is they think that they have to pay off and then close their accounts because they don't want to rack up any more debt. Well, it's true that you definitely don't want to rack up any more debt after you just paid it off. You definitely don't want to be closing any accounts as well. The reason why is when you close an account for your credit report, it's like the payments never even happened. So for example, if you had a credit card that you had for 10 years, for example, and then you closed it because you were trying to get your credit score up, what's actually going to happen is all those 10 years of good payment history completely goes away. It gets ignored from your credit score. So go ahead and pay down those debts. If you want to zero them out, but just make sure that you're not closing any accounts. Otherwise, your credit score might take a big hit in the process. Now, if you've got some other bigger things on your credit report, like collections or charge-offs, late payments, things like that, you may consider credit repair. But I always say to consider this with caution. The reason why is there's just a lot of bad companies out there that'll take advantage of you. Don't want to name any of them in particular, but just make sure that you're doing some good vetting. Your loan officer might be able to recommend a great credit repair company. I've actually got a few in my back pocket if we determine that you're going to need a credit repair company, but just understand that it may take a little bit of time. You might have to spend a little bit of money, but you want to make sure that you're working with the right credit repair company so you're not wasting time or money either. Now, after 10 years of helping thousands of home buyers, I can confidently say that the number one key to having a great experience when you're buying a home is the team that you hire to help you. Working with the right mortgage broker and the right real estate agent can make a world of a difference in your home buying process and can often be the difference between you buying the home that you actually want or being on the home search for several months or even a year before you actually get an offer accepted. And so if you not only want to make sure that you're getting the best home loan possible, but you want us to help you find, negotiate, and close on your first home, click the link below and book a one-on-one call with my team. Now, once you've sorted out your budget and you figured out exactly where your credit is, the next biggest and most important step in the process is getting pre-approved for a mortgage. Now, I think for most first-time home buyers, the biggest question that they have in their mind is how much could I get approved for, or can I get approved at all for a mortgage? And so for me, it's important that you get pre-approved for a mortgage as early as possible. And now, while there's tons of things that I look at as a loan officer when I'm getting you approved for a mortgage, it really just boils down to these three basic ingredients: cash, credit, and income. Now, the cash portion is pretty straightforward, right? This is how much money that you have actually saved up. I say cash just because it's easier to say, but you can't actually use cold hard cash in order to buy a home. You're going to need to deposit that money and have it seasoned in a bank account for at least 2 to 3 months before you're able to show that money on a bank statement. This is due to a lot of anti-money laundering laws. They just want to make sure that we can track and source where that money is coming from. So if you're watching this video right now and you're planning on buying a home in the future and you've got, that literal mattress money sitting at home, you might want to consider heading over to the bank and depositing that money as soon as possible. So generally speaking, acceptable sources of cash, or I guess assets, when buying a home are obviously your checkings and savings. You can actually use money from a 401k or an IRA or some sort of retirement plan. Most people don't realize you can actually take a loan out from a 401k if you've been there long enough. This is a great option for people who are trying to find money to buy a home. Or you can, liquidate stocks, bonds, or even cryptocurrency can be used as well to buy a home. Now, I say cryptocurrency with a little bit of an asterisk because, as I mentioned, you have to liquidate that money. It has to be converted into dollars before you can use it. You can't just transfer in like Bitcoin or Ethereum or something like that when you're buying a home. Now, something I'm seeing a lot more of nowadays, especially with millennial home buyers, is that they're getting gifts from family members. Maybe they have a lot of equity and they sold a home, or somebody else just gave them a gift from like a wedding. You can use this money as well, as long as we can source who the money came from in order to help you buy a home too. And as I mentioned, all of these accounts have to be sourced with at least 2 months of bank statements. If you have got like a IRA or some sort of retirement account, you're going to need a quarterly statement, but generally that's the rule. Now, depending on the kind of home that you're buying, there's going to be minimum down payments for the programs as well. Now, this is probably the most commonly dispelled myth about home buying. You obviously don't need 20% to buy a home. That's considered the quote unquote maximum when you're buying. But as a first time home buyer, you can buy a home with as little as 0% down, depending on the program that you're using. So for conventional first time home buyers, you can buy with as little as 3 to 5% down, depending on how much you're borrowing. For an FHA loan, you can buy a home with as little as 3.5% down. If you have a VA loan, which in my opinion is probably the best loan that you can have, you can buy with 0% down because the VA actually guarantees 25% of the loan for you. And then USDA also allows for 0% down as well. Now, probably the most common question I get asked from first-time home buyers is about down payment assistance programs. And basically how these work is they're second mortgages stacked on top of one of these other kinds of programs. So for example, you would get a conventional loan that requires 3% down, and then the down payment assistance program would be a second mortgage that you don't have to make any payments on for that other 3%, basically financing 100% of the price of the home with 2 mortgages. Other programs at the local or state level may be a grant as well. Just check with your loan officer and ask about what programs they might be available to you. Of course, some of these programs do have limitations such as income limits or credit score limits, so just make sure that you're checking with your loan officer of what you can actually qualify for. Now, the biggest downside to these programs, in my opinion, is they oftentimes come with either higher rates or higher fees. And oftentimes this can cancel out a lot of the benefit that you can get from using one of these programs. That being said, if you're watching this and you're somebody who really is tired of renting and wants to buy their first property as soon as possible, but you don't have a lot of money saved up for a bigger down payment, but you make a lot of money, you can qualify and afford it, I actually think down payment assistance programs are great options for you. Moving on to credit, when it comes to a mortgage, there's really two main pieces that we're looking at. Number one, of course, is your credit score. Now, some of these numbers on here might actually surprise you because you might think that you need absolutely perfect credit in order to buy a home, but that couldn't be further from the truth. Conventional loans will let you go down to as little as 640, FHA loans all the way down to 550 with 3.5% down, and you can actually go even lower than 550 if you have 10% or more down. The VA loan, on average, most lenders set their minimum credit score around 580, but technically speaking, the VA loan doesn't have a minimum credit score that they have in their guidelines. And for USDA loans, it's as little as 620. And if you're thinking about using a down payment assistance program, you're going to need at least a 620 to 640 depending on the program. So while we talked about making sure that yes, you want to have your score in as good a place as possible in order to get a really good interest rate, if it's not quite there yet and you're still thinking about buying a home, using one of these programs, especially like an FHA loan where the interest rates are pretty good despite, a lower credit score, these might be options that are available to you if you just didn't know about them because no one told you you didn't need perfect credit to buy a home. Now, while your credit score determines what kind of programs you can qualify for and what kind of interest rates you can get, really the biggest thing that we're looking at as far as lending you money is your debts. Now, surprisingly, we don't actually care how much debt you have. This is a big misconception. Really, all that we care about when we're getting you pre-approved for a mortgage is what your minimum monthly payments are. So when we pull up a credit report, all we're really looking at is what is your minimum monthly payment for all of your accounts. Now, if you have accounts that are deferred, for example, like student loans, we typically use about 1% of the outstanding balance. So that's where having debt would matter. But otherwise, we're really just looking at the minimum monthly payments. And as it says, we're really only looking at what would show up on a credit report. So things that we can ignore are medical debts, obviously utilities, unless you're self-reporting them. And if you are, we can actually just go ahead and ignore those too. And things like phone bills or subscriptions. Those are not things that we're actively looking at when you're getting qualified for a mortgage. Now, budgeting wise, you want to make sure that you're limiting those. But as far as qualifying, those aren't really going to be things that your loan officer is looking at. And the last piece of the pre-approval puzzle is your income. We obviously want to make sure that you can repay and afford the mortgage that you're applying for. Now, one of the biggest misconceptions is that you need 2 years at the same job in order to qualify for a mortgage. But actually, it's 2 years in the same job field that's required. So for example, if you were an accountant and you've moved from one employer to another, that's completely fine as long as what you're doing is in the same field. An example that wouldn't work is if you were an accountant and then you became a dentist, that would be something that would reset that 2-year timer. But otherwise, as long as you're working in the same general career field, we can draw a straight line between what you were doing before and what you're doing now. We can count that towards your 2-year history. Now, this is something that even surprised me when I was learning about this, but you can actually even use your time in school if you had schooling for a specific field, for example, nursing or being a lawyer or an engineer. You can use your time in school and your transcripts to fulfill that 2-year history as well. So in theory, if you went to med school and you wanted to buy a home right away, you can actually do that as long as you already have an offer accepted with an employer. Now, one small caveat to that is the kind of pay that you're getting. For example, you can't go from being a salary or an hourly employee to being commission only. This is because commission income is typically variable. So when we're looking at commission income or like per diem income, we're doing that over a 24-month average. So technically, you could still qualify, but you're going to be hit with a much harder average, especially if you've only been doing it for less than a year. Now, for all my business owners, just like me, this is where it's a little bit tougher for you guys. You're going to need at least 2 years of filed tax returns in order to qualify for a mortgage, with one small caveat. If you've owned your business for more than 5 years, you can actually get away with your most recent year's tax returns. So oftentimes, a strategy that most people use is they'll minimize their write-offs the year before they want to buy a home in order to make sure they have enough income to qualify. Now, there are other programs that you could consider, such as bank statement loans to help you get qualified, but those often come with much higher interest rates and much higher down payment requirements, and oftentimes aren't the best solution for most first-time homebuyers. So we talked about cash, credit, and income, but there's really ultimately one number that we're looking at to help you get qualified for a mortgage, and that's a little number called DTI, or your debt to income ratio. All this number is your new monthly mortgage payment plus all your monthly minimum expenses from what we talked about earlier, divided by your gross or pre-tax max monthly income. Most programs will have a hard limit of about 45 to 50% for this debt to income ratio in order for you to qualify for a mortgage. So it's actually funny when you're getting qualified for a home loan, you're not actually getting qualified for a loan amount necessarily or even a price of a home. You're actually getting qualified for a maximum monthly payment because of the debt to income ratio. So in this example, right, you've got about $400 a month, it actually should be $500 a month in monthly expenses, and you make about $10,000 pre-tax income monthly, your maximum monthly mortgage payment would be about $4,000 a month. And so by doing the budgeting that we did earlier and figuring out what our expenses and our income is, you can actually pretty closely predict what your maximum monthly mortgage payment would be for what you would qualify for, at least using this calculation. So for example, if you didn't have that $400 or $500 a month in monthly debts, your maximum monthly payment for the mortgage could be $4,500 instead. And so this is why it's important to take stock of your finances as early as possible so you can maximize your buying power later on. So when you're getting pre-approved, your loan officer is going to ask you for some documentation to prove your income, assets, and credit. Obviously, we'll pull a credit report. We can do a soft or a hard pull. Typically, I recommend a hard pull because it'll be the most accurate. But when it comes to your documentation, this is what you're going to need. So I like to follow the rule of two, which is usually about 2 to 3 months of bank statements, 2 years of W-2s or 2 years of tax returns if you're self-employed, and at least 2 pay stubs. Really, we need about 30 days of pay stubs, but most people get paid bi-weekly, so I say 2 pay stubs. And then of course, just a photo ID. We don't need the back of it, just the front of it. If you want to provide 2 forms of it, even better, especially if you've had a name change recently. Now, if you've got a VA loan, we're going to need a DD-214 if you've been discharged or a certificate of eligibility if you're an active duty member. And if you're using a down payment assistance program, we might need a homebuyer education course done by you. These are usually either free if you're doing them in person, if you're doing them online. I believe nowadays they're about $99 to do. It takes about 30 minutes to get through it, but it is something that is required to apply for a lot of these down payment assistance programs. These are really the bare bones of what we would need in order to verify your income and your assets. They might ask you for a little bit more depending on your situation, but at a minimum, this is what you're going to want to prepare going into that pre-approval meeting. All right, so remember that homeownership free trial that I talked about? This is a great way to start preparing to buy a home, getting used to what your budget feels like, and hitting your savings goal. So basically how this works is you're going to start making your mortgage payment today while you're renting. So for example, if your desired mortgage is going to be $4,500, that's how much you know that you can qualify for and what you're comfortable paying. And you're renting right now at $2,500 a month. What you're going to do is you're going to set up an auto balance transfer from your account every single month, the same day your rent is due, to your savings account for that difference. So if you're renting for $2,500, you're going to try to qualify for $4,500. You're going to have an auto transfer for $2,000 every first of the month into your savings account. And this does a couple of great things. Number one, it gets you used to setting that money aside for a mortgage. Oftentimes the jump from renting to owning a property is a much bigger expense. So this at least helps you get used to what that feels like and budgeting around that. On top of that, that also helps you get to your savings goal significantly faster. And so let's say that your savings goal for buying a home is going to be $35,000 and you've got about $15,000 saved right now. So the difference, of course, is going to be $20,000. If you're doing $2,000 a month, that means you're going to hit your goal in as little as 10 months doing nothing else. So oftentimes when I'm talking to buyers who are a little bit further out from buying a home, but they know that they need to start saving, this is the game plan that I recommend for them. So we figured out a budget, we've set you up on a savings goal, and we've might even gotten you pre-approved. But when is it time to go from saving up and waiting to actually pulling the trigger and start looking for a home? Well, there's 3 simple checkboxes that I would make sure that you're marking off to know that you're ready to start buying a home. The first is one we've already done, which is making sure that we've set up a realistic budget and gotten pre-approved for a mortgage to know what we qualify for. The second is to make sure that you have at least 3 months of expenses saved up for a rainy day or an emergency fund on top of the money that you're going to have for your cash to close. But probably the biggest one is to make sure that you're ready to commit to a property and a location for at least the next 3 to 5 years. Most people don't buy their forever home up front. Oftentimes, the home that you buy first is a stepping stone to the next property. But for the first few years of homeownership, you're going to be paying mostly interest instead of principal towards your home loan, which means you might not be building equity quite as fast in those first couple of years in order to turn around and sell your home and make a profit later on. So while I know life happens, there may be other circumstances around selling a home, at least you want to be committing to around 3 to 5 years in that same property and location and know you're going to be stable there so that you can actually make sure that you're ready to buy a property. So once you figured out that you're ready to buy a property, when should you start the process? Well, like we talked about, getting pre-approved, you should start as early as possible, but no less than 90 days before you're ready to actually get into that home. So for example, if you're in a 12-month lease, do it no less than 3 months before your lease is up to make sure that you have time to get pre-approved, fix anything like credit issues or savings goals, and then actually get out there on a home search. Hiring a real estate agent, about the same thing. Typically about 90 days before you want to see yourself in a property. Now, majority of the clients that we work with, at least, we end up finding them a property within the first 15 or 30 days, end up closing on it right away. But sometimes the search can take a little bit longer, especially if you have very specific needs for your property. So you want to make sure that you're hiring a real estate agent to have them walk you through their side of the process as early as possible too. And then of course, when should you actually start the home search? I would recommend no less than 90 days before you want to move in. The reason why is the escrow process when you're actually under contract on a home still takes another 15 to 21 days before you get your keys. So you want to have a good window of time to look at properties, multiple weeks at least, to find the right one and then get under contract so you're not worrying about terminating your lease too early or too late or renting for an extra month. Now, as I mentioned, finding a great real estate agent is a key part of this process, but where do you find one? Now, a great place to start is getting a referral from a friend or family member who's bought a home recently. Ask them about their real estate agent and if they were great communicators, if they educated them on the process. These are all things you want to be trying to figure out. Another great place to start is from your mortgage lender. If your mortgage lender has a great reputation in their area, they probably are well connected with a lot of top agents. For example, here in California, I'm connected with top agents all throughout the state. So if you are looking to connect with a real estate agent, I'd be more than happy to help refer one that I know is going to do a great job for you. Also, a great place to look is just online. There's several real estate agents who have Google pages or Zillow pages. You can look through the reviews and see what other people are saying. You can also see if they're transacting as well. You can see their most recent sales, the neighborhoods that they've sold in. It's a really great place to get some information on those agents. Now, another place that you technically could find a real estate agent is the listing agent from the home that you're trying to buy. But I honestly don't really recommend this. And here's why. A listing agent's job is to make their seller as much money as possible when they sell the home. And a buyer's agent is to make sure that they're saving their buyer as much money as possible. So it's impossible for the listing agent to do both of those duties at the same time without having to be stuck somewhere in the middle, but ultimately they have a little bit more loyalty to their seller who hired them in the first place. Now, that's not every single case. There are some listing agents who do a great job dual representing, but this is also the reason why dual representation is illegal in a lot of states. Now, the counter argument to that is, well, what does a real estate agent do? They just open doors and sign contracts, right? Not necessarily. For me, at least, a great real estate agent will educate you on the process. Buying a home is a big decision and there's a lot of moving pieces, and you want to be in the know every step of the way, so there's no confusion of what you're signing. Great real estate agents will also share with you their secrets and their strategies that they're using with their buyers to make sure their offers get accepted and how they're going to save you a lot of money in the process too. As I mentioned before, they're there to negotiate for you as well. They're there to fight for you and make sure that you're getting what you want in the property. But really, I think the biggest piece is that they're there to answer any of the questions that you have during the home buying process. But above all else, a great real estate agent is there to have your back and answer any of the questions that you have to make sure that you're making a comfortable and confident decision when you're buying a property. All right, so you've got your pre-approval letter, you know what your budget is, you've got your real estate agent, they're ready to show you homes. It's time to put down the phone, stop doom scrolling on Zillow, and get out there and start looking at some properties. When I like to look at properties, the number one thing that I like to do is list out my needs, wants, and like to haves. There's some needs that are non-negotiables. For example, bedroom and bathroom count, right? If you're a family of 4, you're probably going to want at least 3 to 4 bedrooms, depending on how old your kids are. Now, the wants and like to haves are completely up to you. For example, I live in a gated community with a lot of amenities. Some people don't want to live in a community with HOA or amenities. They just want big space in their backyard. Whatever your needs, wants, and like to haves are, you want to make sure that you're listing them out and sharing them with your real estate agent so they know to show you properties that you're only going to be interested in. Now, while you're shopping for a home, one of the things that I like to do is making sure I'm keeping you updated with where the interest rates are and what your monthly payment is going to be for the homes that you're shopping for. Interest rates change all the time, and depending on the property that you're looking at, it might have HOA, Melrose, or some sort of other fees that aren't really obvious when you're looking online. And personally, I'm not big on surprises unless it's my birthday or Christmas, so when it comes to buying a home, I want to make sure that my clients are well informed when they're buying a property and know exactly what their numbers look like. If you're on a time crunch to buy a home, something that you might want to do is schedule multiple showings in a weekend. Getting out there with your real estate agent and seeing maybe 5 or 6 properties in one weekend is a great way to see a lot of properties, but make sure that, of course, they fit the needs and requirements that you have from the needs, likes, and wants that we talked about. And as much as possible, you want to be viewing these properties with your real estate agent or an agent on their team. This way they can be there to, of course, just do their job and represent you and answer any of the questions that you have about the property property and ask the agent that's on site any questions as well. And this is especially true when it comes to buying a new build property, because if you walk onto a new construction site without your real estate agent, they consider you their client already. So even if you've already hired a real estate agent, if you go to that new build without them, they won't be able to represent you. And for me, I would never buy a home, especially a new build, without a real estate agent representing me. So at least for me, these are my non-negotiables when it comes to finding a property. So number one, of course, is finding a home that I could live in for at least 3 to 5 years. Finding a home that I would rent if I had to is a huge piece. A lot of people end up selling their home and rolling that equity into another property. But if you're somebody who wants to build a portfolio of real estate over time, you want to think about the home's potential to rent as well. So when you're looking at homes, don't just think, would I buy this property? You should also be thinking, would I rent this property and how much could I even rent it for? Now, as we're seeing less and less work from home, finding a property where the commute is something that you can handle is probably really important. Some people are willing to drive a little bit further away from work in order to get a better deal on a property. For example, here in San Diego, some people move all the way up to Riverside and make the hour-and-a-half commute down to San Diego for their job. For me, that's a lot. I would never do that, but if that's something that you're into, go for it. But just make sure that you understand the commute, especially during the workday. If you're seeing a home on a weekend, you might not get the full idea of how long it takes to drive from work to your home. One of the things that my family did when we bought our first property is we made sure that we had enough room for now and to be able to grow a little bit later. So when me and my wife bought our property, it was just the two of us, but we ended up buying a 3-bedroom condo. Now that we have a kid, we didn't have to move properties. We just turned our guest room into the nursery, and I still have my home office, which I'm shooting this video in right now. And probably the biggest of all is just making sure that the home is either at or under budget. Sometimes it's very easy to fall in love with a property, especially if it meets all the needs and likes and wants that you have, but it's just outside of budget. But staying financially disciplined and buying a home that's either at or under budget will set you up for success later on. Now, once you found a home that you really love, the next step is to write an offer for that property. No, well, of course, when you're writing an offer, the goal is to get as good of a deal as possible on that home, but you also want to make sure that you're going to get your offer accepted in the first place. So it's super important to be realistic and respectful when writing your offer. Oftentimes, the most frustrated home buyers I'll come across are the ones that lowball every single property by as much as $50,000 or even $100,000 under asking price. And they'll sit there and wonder why they've been searching for a home for months, if not years, without getting an offer accepted. It's because sellers aren't really even looking at their offers in the first place because it's such a ridiculously low offer. I mean, think about it this way. When you eventually sell your first home, you've probably put a lot of love and care into making that home what it is, and you're probably expecting at least a certain number of dollars from the sale of it so that you can go buy your next one. And so every seller has a number in mind that they're trying to hit, especially if they're already under contract on their next home. So oftentimes the goal isn't to win an offer right away, but you will want to write a respectable offer that'll at least get you a counter from the seller, so then you can start negotiating. A great tip when you're looking at homes and writing offers and you really want a great deal is finding homes that have been on the market for more than 30 days. Oftentimes, homes that have been on the market for more than 30 days are due for a price reduction, and typically most agents reduce the price by about $10,000 when they do. So knowing how long a home has been on market can give you a little bit of leverage to get those credits that you would want or a discount on the home if you were trying to get a good deal. But don't expect to get those same kind of deals for homes that have been on the market for maybe 1 or 2 days. Those ones are hot and will probably go fast. One of the things that my team does to make sure that you're having the best chance to win your offer is shortening the timelines. Most real estate contracts are about 30 to 45 days, but because of the work that we do to get our clients pre-underwritten and pre-approved the way that we do, we're able to close most of our home loans within 10 to 15 days. And so if you were selling your home and you had 2 offers for $500,000, but somebody was going to give you that money in 15 days versus 30 days, you're probably going to pick the one that gets you that money a lot sooner. And so this is why it's super important to be working with the right agent, because you want to work hand in hand with them and ask them how you're supposed to write this offer to have the best chance of it getting accepted. And when you are writing that offer, like I said, you want to be respectful and make sure you're not asking for too much, but don't forget to ask for nothing at all. And so when you finally do write that offer with your agent, make sure that you're being respectful to what the seller might want to give yourself a chance of getting the offer accepted, but don't ask for nothing at all. Make sure that you're still asking for at least a couple of closing cost credits just to see what you can get. Ultimately, the goal is to get a counter so then you can go from there and negotiate and then eventually come to somewhere in the middle between yourself and the seller. Now, ideally, if you found a home that fits your budget, fits all the needs that you want, and you wrote a clean offer, your offer is going to get accepted by the seller. And this is the second biggest milestone in the home buying process, but now the work really begins. So you got your offer accepted, now what? When you're under contract on a home, you've got to follow some pretty strict timelines. Now, as I mentioned, the average real estate contract is about 30 days, but you can do it in as little as 15 to 21 days. But there are some key timelines that you want to be aware of. The first one is your discovery period, which is the first 3 to 5 days of the process. This is when you're going to start ordering inspections and appraisals, finding out as much about the property as possible. The next part of the process is the loan or underwriting period. Depending on how long your contract is, this is about 10 to 17 days. This is the time that it's going to take to get your loan fully approved. And then lastly is the actual closing process, which is usually about 1 or 2 days at the very end. So overall, you can expect to be under contract on the property for as little as 10 days up to about 21 or even 30 days, just depending on how your offer was written. Now, it's important to note that some banks can close faster than others, and depending on the program that you're using, that can add some delays as well. For example, some down payment assistance programs have to go to like the state for secondary approval, so those can add a couple of days to the process. But ideally, you're going to be looking at around 21 days, 15 days on the low end, 10 if you're in a super rush in order to close on a property. All right, so the discovery period, these are the first few days of your contract. So once you've got your offer accepted, the very first thing that you're going to do the very next day is you're going to head over to the bank and wire over your earnest money deposit. Typically, this is about 1 to 1.5% of the price of the home, depending on what was negotiated in the original contract. Now, this money doesn't just go directly to the seller. It's held in a third-party escrow account until closing, and it actually goes towards your down payment and closing costs. So don't think this money is going to be lost. It'll get credited to you in the end. And if you use something called a contingency, which we'll talk about in a sec, you can still get this money back. Once you've wired the deposit, the title company is going to send you a bunch of paperwork to fill out, basically just making sure that your name is going to read exactly how you would like it to on title, and seeing if there's any other information that you would want, such as vesting information. It's a lot of legal stuff that you're going to have to worry about, but typically most people hold title as joint owners or joint tenants. On the loan side of things, you're going to be receiving what's called a loan estimate and a full stack of loan disclosures. Most of the documents in there are honestly boring legal stuff that you're going to have to read through. The biggest pieces that you're going to get in that document are, of course, like I said, the loan estimate, which is going to break down the loan you've chosen and all the different fees, as well as the loan application, making sure that all the information on the loan application is correct. Your employer is correct. Your social security and date of birth is correct. Your name is spelled correctly. All of that stuff is super important. Now, if the market is in a good place, you may consider locking that loan as well. For me personally, I don't like floating my loan and waiting for better interest rates. There's oftentimes just too much to risk, especially in this market right now, by floating your interest rate. So my general rule of thumb is if you like the rate, lock it. It's way better to have peace of mind from day one. Especially with us, we can actually float your rate down if rates get 0.25% lower before closing. So for me, there's not really a lot of benefit to floating and waiting around. Just lock your loan. Honestly, just lock your loan and make it easier for yourself later on. Now, the next piece of the discovery period is scheduling your inspections. You're going to have a few different ones. You might order termite, a general home inspection. If the home inspection has some other things like a roof or a foundation, you might order inspections for those. But generally, you're going to order these inspections up front just to make sure that there's nothing actually wrong with the property. On top of that, your lender is going to order something called an appraisal. This is kind of like a home inspection, except it's really more there to verify the value of the property. I mean, if you're buying a home for $500,000, $600,000, $1 million, you want to make sure that it's at least worth as much as you've agreed to buy it for. So an appraisal is a super important part of the process. And as I said before, you want to be mindful of your contingencies. These are essentially your get out of jail free card if you find that the home isn't what you thought it would be. Typically, your inspection contingency is within your first 3 to 5 days. So that's why you want to have these inspections done as early as possible. If there's something wrong with the inspection, you find out that the home's a dud, it's got a lot of work that you're not really willing to pull into it, you can cancel the contract and get your earnest money deposit back, no problem, as long as it's within those first few days. The second contingency is the appraisal. Like I mentioned, you want to make sure that the home is worth what you're buying it for. If the appraisal comes in low and the seller isn't willing to meet you somewhere in the middle, you can pull out of the contract, get your earnest money deposit back, no problem. And last, of course, is the loan contingency. If for whatever reason your lender didn't do a good job or something else happened during the process, for example, you got fired from your job in the middle of buying a home and you suddenly can't qualify for the mortgage anymore, you can exercise your loan contingency and, like I said, pull out of the contract, get your earnest money deposit back, no problem. And so you really want to be mindful of these deadlines, because if one of these deadlines passes and you decide afterwards that you want to exercise them, depending on how the contract is written, you might not be able to get your earnest money deposit back, or even worse, you might be contractually obligated to still close on this property. So if you ever have any questions about any of these contingencies, make sure that you're asking your agent about them. Ultimately, our goal is to make sure that we're protecting your money throughout the process. So these contingencies are there to make sure that's happening. So on the loan side of things, probably the biggest question that I get is what even happens during the underwriting process. It's honestly not as intimidating as most people make it out to be. Honestly, most of the time the lender's just asking for updated documents, especially if you got pre-approved months before. We're just needing new bank statements and pay stubs, nothing too crazy. Now, the conditional approval will be back from the underwriter within the first couple of days. If your lender did a good job and all the documents are there, there's pretty much nothing for you to worry about. But sometimes underwriters might catch something that your lender didn't for whatever reason. Your goal with underwriting is to provide things to your lender as fast as possible and make sure that you're answering any of the questions that you have. Don't think about your loan officer as the judge and jury. That's really what the underwriter is. But your loan officer is there to kind of be your attorney. Tell them everything that they need to know so that they can make sure they're painting the right picture for the underwriter in order to get your loan approved. Some key things to make sure that your loan doesn't get denied while you're in underwriting is, of course, not making any large purchases or opening new credit without your lender knowing about it first, as well as making big deposits or withdrawals from any bank account. And surprisingly, not the most obvious one for a lot of people is quitting or changing jobs while in the process. During the underwriting process, you'll probably want to select an insurance company, probably as soon as possible as well. At least here in California, we're seeing it take a lot longer for insurance companies to underwrite and actually even provide a quote for insurance. So you want to try to get that knocked out as early as possible so you know that the home you have is one that's actually going to be able to be insured, especially if you're in a high-risk area for things like fire or floods. But ultimately, this entire process is working towards getting that clear to close, knocking out conditions till you know 100% sure your loan has been finally approved. And so ideally, if all goes well, the home passes all the inspections, the home comes in at value with the appraisal, and you finally receive that clear to close from your lender, it's finally the day that you've been waiting for, closing day. And so in this part, I want to cover what happens not just on closing day, but what happens afterwards as well. And so while closing on your first home is incredibly exciting, there's still a lot that needs to be done. So here's a general idea of what you need to be looking forward to on closing day and beyond. So before closing, there's still a little bit of stuff that needs to be done. For starters, you want to confirm with your lender when your closing date actually is going to be. Usually it'll be the same day as the contract, but if there were any delays in underwriting, this closing date may have moved. You want to make sure that you know when you're actually closing on the property so you don't end up hiring movers or transferring utilities and then having to reschedule all of those things later on. So as I mentioned, you want to start scheduling movers once you know exactly the date, cancel your lease if you're in a lease right now, transfer utilities, and confirm the insurance effective date. And so once you know exactly when your closing day is going to be, then you can feel free to go ahead and start scheduling movers, letting your landlord know that you're going to be terminating your lease, transferring the utilities over to the next property, as well as double checking that your insurance is going to be good for the day that you actually move in. Now, the very last thing that you're going to get from your lender before you sign final loan documents is something called the closing disclosure. This document's going to look a lot like the loan estimate, but there's going to be a few key differences. At this point, most of the fees have probably changed or some of them have been removed because they weren't necessary. And if your agent has negotiated any other credits during the process, they'll be added onto this as well. But really the main things you want to make sure that you're looking out for on this document is what your final interest rate is, what your final monthly payment is, and exactly how much cash to close you're going to need. Now, this is a rough draft of your final loan documents. Some of these numbers still might change as they're being balanced with escrow, but know that you'll probably be within a few $100s of this if we've done a good job. Now, it's important to sign this document as soon as possible because it is time sensitive. There's a 3 business day cooling off period from when you sign the closing disclosure before you can actually sign final loan documents. So if you end up missing the closing disclosure in your email for whatever reason and signing it later on, this might actually end up delaying your closing, and then you're gonna have to go back and reschedule all those movers, reschedule the utility moves, and all those things. All right, now, so this is gonna be your closing day checklist, and this is pretty much what we're gonna be doing from start to finish. The very first thing that you're gonna wanna do is once you know the final number from your lender for what your cash to close is, usually escrow might even call you and let you know what that number is gonna be. You're gonna wanna head over to your bank and wire those final funds as soon as possible. Now, once the title and escrow company has confirmed that they have your final loan documents and ready for you to sign, they'll schedule a notary appointment for you. Oftentimes, you're gonna end up doing this either in the title or escrow office itself, but if you've got a busy schedule, they can send a mobile notary out to you. I've had signings happen at like Starbucks or even at people's homes. So they can coordinate around your schedule if you can't make it to their office, but oftentimes it's a little bit easier if you just set the time aside and go to the office and sign it there. So once you've signed your final loan documents, the escrow company is going to email it over to your lender. Once they confirm that all of the documents are signed correctly, they're going to fund your loan, which is probably the moment that you've been waiting for the longest. Now, once you finish signing all your final loan documents, the escrow company is going to email it over to your lender. They're going to confirm the signatures are all in the right places and everything matches. And then from there, they're going to fund your loan. This is honestly a pretty straightforward process. There's nothing really that you have to do on your end, but sometimes lenders might not fund your loan until you've wired wired your funds first, which is why I said you should be doing that as early as possible in the day. And once title and escrow have confirmed receipt of both your funds and the lender's funds, they're going to go ahead and disperse those funds to all the appropriate parties and to the seller for the proceeds of their sale. And then they're going to go ahead and record the transaction with the county. Depending on the time of day that you signed your loan documents, they might be able to record same day. If it's a little bit later in the evening, they might record the next day. But once they've recorded the transaction with the county, that means this is officially your home. And once you receive confirmation that the deed's been recorded with the county, you can go ahead and call up your agent and they'll schedule a time for you to pick up your keys. This is often probably the biggest, most exciting part of the process. Sometimes the real estate agents will show up with champagne or a TV, something to celebrate you buying your first property. Take a lot of photos, take it in. You've worked really, really hard to get to this point. But once all the good feelings of finally buying your home sets in, there's obviously still a little bit of work that needs to be done, especially the move. If you don't have a lot of friends and family to help you out on the moving day, hire some movers. I highly recommend it. It's going to make your life a lot easier. Go ahead and start transferring utilities over, schedule the cable or internet to come out as well and get that activated on day one. All those things are super important. Nothing's more frustrating than having move-in day and not having power or internet at your house. Now, one of the big joys of homeownership is all the mail that you're going to be getting, especially during that first month. Remember how I said your purchase is recorded with the county? Well, it's public record. So unfortunately, a lot of scammer companies will get a hold of that information and try to get you to buy a copy of your grant deed for like $200. It's ridiculous what people do. So if you have any questions on any of the mail that you're receiving, make sure that you reach out to your loan officer, reach out to your real estate agent. They'll confirm if it's something that you actually need to be paying attention to, or if it's something that you just go ahead and throw in the trash. Another key thing to do is if you are eligible for any sort of tax exemptions, you want to start filing those once you have a copy of your grant deed. Like I said, you can get a copy of this from your real estate agent or your loan officer, or even the title or escrow company should just be able to give this to you for free. Some of the more common exemptions that you'll end up seeing is if you are a disabled veteran, especially 100% disabled, you can file a tax exemption. Depending on the state, it may be a full exemption from property taxes or a large portion of it. Something that I remember having to do, and honestly I took a little bit longer than I needed to do, was filing a primary residence tax exemption. Until you tell the county that the home you bought is not a rental, they're just going to assume that it's a rental. So they're going to charge you taxes as if it were a rental property. So to avoid that, you're going to have to send in some paperwork, or you can even do it online and let them know that you're occupying the home as your primary residence. And probably the last and most important piece is to make sure that you don't miss your first mortgage payment. So usually about 3 to 5 days after closing, you'll receive an email from your lender with instructions on how to set up online payments for your mortgage. Now, something that might happen is your lender might sell your mortgage to something called a servicing company. There's no reason to panic. Your loan is not going to change in any way. The only thing that's changing is who you're making the payments to. But like I said, if you have any questions, just ask your loan officer. They'll be more than happy to help you out. So at this point, we've covered the entire process from start to finish. And hopefully after seeing it, it's a lot less intimidating and a lot more exciting. But understanding what steps to take and actually taking them are two different things. You need a strategy that will guarantee that you can get into your first home within the next 12 months. Click the link below to book a free one-on-one call with my team where we'll answer any of the questions that you still might have about the home buying process, share some strategies that will help you finally get pre-approved for a mortgage, and start putting together a step-by-step plan for you to follow so you can finally turn your dream of buying a home into a reality this year. Book a call today and I'll talk to you soon.